Years of fiscal derailment and chronic competitiveness problems have been at the heart of Greece's financial crisis, which has seen two successive Troika IMF stabilisation programmes since May 2010. But how has this impacted the country's banking sector? Here to discuss is Dimosthenis Arhodidis of Eurobank. Well, Dimos, the face of the banking sector in Greece, it has been plagued with crisis. So what's the situation today?
The situation today is a lot more stable than it was a few months ago. Greek banks have been recapitalized, all four systemic banks. The last one to be recapitalized was National Bank of Greece, which recapitalization exercise finished a few days ago. However, we went through a terrible 2015. Supposedly 2015 was going to be the turnaround year. However, the negotiations of the leftist government that took power in January of 2015 lasted for about 6 months. We ended up with capital controls, which cost the economy quite a bit. Also, we ended up with another round of stress tests by the European Central Bank, which led to capital needs that banks needed to raise. Fortunately, all four banks managed to raise the funds needed for their recapitalization. So hopefully the future will be much better with a banking system that is sound and totally recapitalized.
Well, you mentioned stress tests, and they happened in October. So what were the key findings to come out of these?
The stress tests actually started in August and finished sometime in October. The key findings were that there were still capital needs for some of the banks. However, the bank that I work for, Eurobank, ended up number one in terms of capital needs, meaning it had the least capital needs of all four banks. And we managed very easily to raise all the capital needed under the adverse scenario using private funds.
So how resilient would you say the banking sector is moving forwards, and where does Eurobank fit into this?
The banking system is definitely a lot more resilient. However, its resilience will be proven as we go through 2016 and 2017, hoping for an economy that will grow instead of being still in recession. The banking system needs to focus on bringing back deposits. One very important statistic is that about 45 billion euros are kept in cash at homes. This is about 25% of the country's GDP. The resilience of the banking system will depend on how easy or how quickly these funds will come back into the banking system to improve its liquidity, because banks need to provide liquidity to the economy. Also, the resilience of the banking system also will be tested by the way banks will handle all the non-performing loans. As you can imagine, after 6 years of being into recession, there is about 40% of the loans portfolio of the banks are non-performing. So banks need to handle this NPL portfolio and trying to get the loans back and stop building provisions, which hurt their profitability.
Greek banks are now going through a period of recapitalization. Talk me through this, and how are you feeling the impact?
One of the things that recapitalization exercises do to banks is that banking employees stop doing the regular work. They focus more on what the stress tests results will be and how the bank will be recapitalized. So for the last 2.5 months, we were focusing on that instead of focusing on our actual job, which is to serve the clients, satisfy their needs, and create value for the clients and the bank. As I said, this exercise is over now, so hopefully we will go back to our regular work, which is to serve the clients, create value for them, and create value for the bank and its shareholders. And we're ready to go back and support the Greek economy.
And what's the remaining challenges for Greece's financial sector moving forwards?
The challenges are mostly political. We need to have a long period. I'm not sure how to define long period, but I would say we need to have at least a couple of years without elections. Elections create instability in any country, but more so in Greece right now. And we need the political system to move along with the restructuring of the Greek economy, apply all the necessary changes needed, reduce the bureaucracy, fight tax evasion, fight corruption, and give incentives for investments to come back to the country, either from Greek individuals, Greek entrepreneurs that hold assets abroad, hold capital abroad, and could bring it back to the country and make investments, or attract foreign direct investment, which has been at very low percentages relative to GDP if you look throughout the years, throughout the last 10 years.
And finally, how do you see the country's economy developing? Any green shoots?
There's a lot of potential for the Greek economy. Asset prices are very low. We are at a point where entry prices are very attractive for investors. Tourism is one sector that attracts a lot of attention from abroad. Also, fish farming, energy. There are sectors where an investor could come in, buy very cheap, make the necessary investments, and make money out of this. We're talking about internal rates of return, IRRs, of at least 15%. So there's a lot of potential for the Greek economy.
Dimos, thank you.
Thank you very much.